Hello, everybody. Jim Malone coming to you live on Dallas Trading Floor. It is Tuesday. Very disappointing close on the market. I think that the relief rally that I really believe. I think we're going to go. We're going to take another leg down probably. That's my guess, anyways. Some of the the charts are telling us that we're just we're in one of these periods where it's going to go lower. Here's basically what happened on the stock market today. The Dow Jones, of course, was off, and so was the S&P and the Nasdaq. They all were off. Russell, it was off less than most of the other ones, so that was a kind of a good sign there that the Russell was off less. Basically, what's going on right now is that most people are in cash. I'm pretty much in cash right now myself, but there is a interesting thing going on. I kind of want to just briefly touch on that, and that is that we are seeing interest in U.S. Treasuries because there are people that have to be invested in the market, and there's increasing demand for U.S. Treasuries, even as the rates are starting to go up. So here I have an interesting play that you might be interested in, and this is based on U.S. Treasuries. There is a bond fund called the TBT, and basically what this does is that this moves it moves against the interest rate. So if as we know from college, as the interest rates go up, the value of the bonds go down. Well, this is the inverse of that. So as the interest rates go up, the value of this one goes up as well. It's called the TBT. I'm not invested in it yet, but I'm thinking of taking a position in it. The part of the reason is because it is performing very, very well. Let's give you kind of a comparison here. So there we go, the comparison chart that I made. Here's the comparison chart. The TBT is on the top here. It's on the top. This is kind of the red line here. The line that goes straight across is the cash. Believe it or not, cash. There is a cash equivalent, and then the line going down is the bond fund. So as you can see, since the beginning of the year, the TBT, which is inverse of the 20-year Treasury, it's a short, has been going up. So this is giving us an interesting opportunity, I think. Where we aren't in stocks or at all, we're just basically in we're just basically in this instrument, the TBT. So let me just jump up and go through that with everyone here. TBT, and let's pull up the live chart here. Okay, hold on a second. A little bit of a slow connection here. I think I'm going to hopefully get there we go. Okay, so basically what's going on here is that we've got a there we go. Let's adjust it. Take a second. There we go. All right, so this is the TBT here, and as you can see, in the last few months, it has been doing quite well. I'm going to kind of take off some of my notes here on it, but let's go to the markup tool. Okay, there we go. So what's happening here is that we went up very nicely to 29. We've pulled back to the 50-day line here, and it did pull lower today, and then it moved right back up. So if you look at the relative strength line, this blue line here, you can see that's moving very, very nicely, and the S&P is moving down. So what we've got here, I think, is we're going to see a reversal, hopefully, on this. Now, currently, as of today, it's got a relative strength of 98, which means it's in the top 2%. Now, one of the reasons I like this one is because I do believe that as the economy gets into more trouble with more inflation, I think people are going to want to seek safety, and that safety is the is the U.S. bond index. But I do believe the rates are going to go up on treasuries. That's what I think we have to have at least one more rate rise, and that's going to happen, I believe. And so I do think I'm very bullish on this on the TBT. Now I don't have it yet, but I'm looking possibly to I'm looking possibly to use the TBT. Oh, we can barely hear you. Oh, I'm sorry about that. Let me see if I can get closer here. Hopefully, yeah, I'm having a little bit of issue. There we go. Okay, so hopefully you can hear me now. All right, sorry about that. Okay, let's look at this is a question from TikTok. Let's look at AXP. This is the American Express. Now I have a short on American Express, and it's been doing fairly well. Let's kind of go through that here. Again, this is American Express, and then we did short this one, and it is starting finally to make its movement down. Now I probably shorted it too early, but there was the death cross on it there, and it did start moving down, and it did come up to the 10-day line. And I think that the trend on this is going to be lower. That's what it's looking. We've got earnings in 10 days. Would I enter a short here? No, I would not enter a short here. I would wait, possibly wait on this one a little bit until after earnings. Earnings are in 10 days on American Express. I don't expect American Express to have very good numbers this time. I just for them. So I do expect this thing to move lower. The question is, how much lower can it go? I do think we're going to see a continued retreat here. There we go. So this is the weekly chart here. As you can see, it's already moved down. I think it's going to move down. Possibly, I do believe that there is some overall. There's going to be some support, basically right about here, which is about 120. That's what I'm kind of looking for here. But as you'll notice, the relative strength line on the weekly chart is pointing down. And as you can see, this is weakening. So I think in the long term, if this trend continues, we are likely to see it lower. So that's part of the reason I do have a short on this one. It's a bear put spread, and hopefully that will work out pretty well. That'll work out pretty well for us. All right, let's take some questions. Thank you so much for holding on. I so appreciate it. My connection's a little bit slow today, so there may be a little bit of technical issues regarding this. I'm still waiting for it to. Okay, come on, there we go. And sometimes the comments they don't quite come up as quickly as I'd like them to see. All right, XLE, of course, checking its pulse. Okay, let's look at the XLE. Of course, the XLE, for everyone out there that doesn't know this, is the Spider Select Energy XLE. It covers the energy. Now, here's the thing. Oil prices have been moving down. I think that the oil markets are starting to balance. I'm not ready to buy this one yet, again, but I do think that there is a significant. It's pulled back down to the 200-day line. The question is it going to bounce here? Right now, as you can see, and the relative strength line just doesn't lie. It's always the one you want to watch. It's as you can see, at least from the last, from the end of May through now, it's been moving lower, the relative strength line. So oil as a sector in the economy is weakening right now. But again, this is just, it's such a tough market to trade because, it's just literally been all over the place. And so right now, let's wait for a bounce here. I'm not ready to jump back into oil. If you'll notice, the S&P 500 is moving down, and so is oil. So we're starting to see a change in leadership in terms of the market, and that's really gone to medical. There is a medical stock that I do. It's the only stock that I own long right now. It's Mckesson Mck, and I haven't held it for that long. It's sort of, it's sort of I want to be in the market kind of stock. I'm not really expecting it's going to be super great, but it has, it is performing well. Oh, look at that. Okay, so it moved up nicely after market. This is what you want to look for in a stock. You want to see that relative strength line moving up. That's definitely the case here. This is the area of the market right now that's getting the love. It's the medical area. And so I do have Mckesson. It's the only stock I have currently in the medical area, but it is moving up very nicely as well. And it pulled back to the 10-day line. I think we're going to get a nice reversal. After hours, it's up significantly, $7 a share. So we're gonna see a nice move up to the pivot. The pivot here, 339. Let's write that there. Okay. So this one you probably could, if you want to get some exposure in this market, this is one you might want to look at. Mckesson. I think this one might work pretty well. I have a stop loss on it though. I did buy it. My stop loss is right about 331. It's right basically at the it's basically at the 50-day line. So that's kind of where I'm holding it. As you can see, very nice relative strength line, showing a lot of strength against the rest of the market. The reason this is so critical is because this shows the stock getting stronger against the relative market. Now, a lot of things are getting stronger, but this medical area is starting to move very, very nicely. So thanks for that. And let's see. I'll get back to the question on the short on the spider. Let's see. Let's see what this one is showing. Okay, great. The Fed's excuse CPI couldn't predict inflation. Yeah. Well, we are in a situation where we're having a lot of inflation, obviously, and I do believe in order to cut this off, that is why you're going to see them push the rates up. The Fed's going to push up rates. They have to push up rates. If they don't, inflation goes, maybe not to hyperinflation, but it goes up significantly. That is one of the reasons why I like the TBT here, because it's going to move with rates. If rates go up, the TBT will go up. With oil, I think you're going to see some moderating on that because the oil is starting to come back into balance. I mean, we're basically looking at $4, $4.50, $5 oil. That's the new norm, at least for now. And I think once that stabilizes, oil will be, it'll still move well, but it won't be moving the way it's been moving. So right now, again, I'm mostly in cash. I want to get some exposure into the market, but I'm basically at this point looking possibly to just do an interest rate play. That's why I'm looking at the TBT. And then I'm short just about everything else. So I think in general, what's going to happen in this market, we're going to see the market retreat. Unfortunately, we've just broken the relief rally. I think we're going to move down again. So let's look at the spider. I'm predicting that the spider will eventually settle at about 320. That's kind of where I'm looking for it to settle. But let's pull up that chart here. Let's analyze that. Take a second because again, there we go. Because again, my system is a little bit slow. Okay, so here we go. The relative strength line, of course, on the S&P 500 on the spider, of course, is almost horizontal. And the reason why, of course, is because this is basically a very broad measure of the market. So it's not moving up against it or down against it. But in general, the S&P 500 is moving lower. Okay, now the spider basically mirrors that because, of course, it is the ETF that covers the spider. So what do I see here? Well, I see that the S&P 500 is going to move lower. And we're definitely moving in that slope. I'm seeing basically it move down to the 340. There's support for the spider right about 362. Currently, we're at 380. I do think it's going to go below that. My guess is, if we just draw the line here, my guess is that it's going to move lower, and eventually we're going to get to the 350 range, and then eventually 320. That's where I think that it's headed. But I definitely think that you're right. I mean, if you want to do, this might be a shortable thing. I'm not shorting it right now, but this may go lower because it's moved up. It looks like it's got resistance right at the 21-day line, and it is moving over. So they really couldn't. You're right. The Feds, they can't really predict. So what they're going to have to do is they're going to have to raise interest rates, and when they do, then of course it's going to be painful. But you can get in on some of that. I think with the TBT, just my guess. Again, I'm not touting it. I don't own it yet, but in my estimation, that's kind of where it's looking the best. Do you think the bear market is over? No, I don't. I wish I did. I think we're looking at the bear market going on for at least another. I think we're looking at 9 months at least on this. I think we're going to go a lot lower. I wish it was over with, but I'm afraid not so much right now. The bear market, I don't think is ended, and I don't think we're anywhere near close. Unfortunately, I wish I did. All right, let's look at Home Depot. I don't know if you're hearing this. I have a little bit of an issue again on batteries here, but let's look at Home Depot for somebody on TikTok HD. And take a look here. I got to remember to charge up my devices before I go here. So let's see. Okay, so this is Home Depot. You're going to have a little bit of problem with the. I may go blank on you on TikTok here because I'm running out of battery. But on Home Depot, I think we're going lower on this. But here's the thing about Home Depot. On the Home Depot chart that I want to put out there, I want to put out there is that we've got this relative strength line that's starting to gain. So we could potentially, potentially have a bounce up here. I'm not so sure. It's really hard to say on this, but I think in this downturn, people just aren't going to be, they're not going to be spending a lot at Home Depot. I think that. They're going to be spending more on necessities. That's kind of what I'm looking at. So I'm not very bullish on Home Depot right now. It's in a downward trend. The relative strength line is flat. I mean, I wouldn't short this because the relative strength line is flat, but I still believe it is moving lower. So I just wouldn't be an investor in it right now. It's just too difficult to call, I think. All right, let's take a look. This is an interesting question. Okay, that one pipeline is proposed to shut down next week. Biggest line between Russia and Germany. Absolutely. Here's the thing. Let's look at the nat gas. Let's look at the price to see. Now, here's the thing about this the nat gas chart that I have. It really only covers domestic nat gas. Let's get that in there. See. There we go. All right. So this is the. There we go. We're just pulling up the chart for natural gas here, and let's take a look at it. See kind of what the reaction is. There we go. Okay. So we're starting to see a bounce. It came down here, and then now it's starting to bounce. I think what's going to happen here is that we're going to start to see. Companies like Cheniere come online with the gasification plant, and I do think that's going to make a significant difference. So here's the thing about natural gas: as it goes higher, and look, it's natural gas is all-time high back here in May, and so that means electricity rates are going up, unfortunately, because that's really what makes it happen. Let's take a look at Cheniere. It's LNG is the symbol of it. This company, it's a Texas-based company. What they do is they take natural gas out of the Permian and they liquefy it. They have 2 plants, and they're just getting online on these. One in Sabine Pass, Louisiana, and the other one in Corpus Christi, Texas. And this is significant because I do think that as the Russians shut off the the natural gas to Europe, this company may do well. This is a company I like a lot. I've owned it before. I haven't really gotten the best play on this one, but I do think that it came right down to the 200-day line. I think it's going to bounce here. Now, I'm more bullish on natural gas than I am on oil right now, only because of the shortage that we have in Europe. And I do think that we're going to see a nice bounce off of 120. As you can see, it's up after hours. Now, the question is, will it reverse? I'm not so sure. Here's one thing that's a little bit concerning me. If you look at the relative strength line, it's pointed essentially flat, and it's moving a little bit down. But it's starting to make a move. I wouldn't buy this until it moves above the 200-day moving average. I want to see this relative strength line improve, but that's one you could possibly look at in terms of a potential buy. There would be LNG. Let's see. I feel bad for people that got into bidding wars. Oh yeah. Oh, it's gonna be bad, because as the interest rates go up, you're going to see a lot of houses. Matter of fact, last year we sold a house in California. I think we sold it pretty much at the top of the market, I'm hoping. And then we took the proceeds of that. We bought 3 houses for cash down near Houston, actually, in a place called Conroe, Texas. Bought 3 new houses down there, but they were all basically at or below the national average, and they were all new. So there are some parts of the country that are not going to experience as much inflation in terms of the house cost. I think if you're buying a house, $500,000 house, you're in trouble. But if you're buying a house that's maybe new and then maybe in the 300 range, we were paying about 300 for houses that were basically under 3 years old and basically all brick. So you can do it. You don't have to necessarily do it in your neck of the woods. I do think that the Houston area still has some very, very good opportunities, especially north of Houston. All right, let's look at this one. This L3. Okay, LHX. This is a good company. This is L3 Harris, and this is a defense contractor. Let's look at L3. I would LHX, and this is a defense contractor. Good company, by the way. And let's take a look at it right now. So this is for TikTok here. So L3 Harris. Would I buy this thing? No, and the reason is because it's got essentially a flat. It's essentially got a flat relative strength line. It has come down and it's touched the 200-day line, but the general trend is lower on this one. So I probably would not be a buyer of L3 Harris. Good company, but I just don't think it's the right place to buy it. The stocks that you want to buy are in the medical area. Let's look at Mckesson Mck. Again, this is one I do own, and I do think this is really the only holding that I have long in the. This is the only holding I have long, and as you can see, much different relative strength line here. The relative strength line is moving up very nicely, and we do have a lot of. We do have money coming into it. It's come back down. It's moved off the consolidation. I think it's moving up towards the buy point. So this is one I do own, and I think that this is viable. It's up very nicely after hours, about 2% up after hours. There's just not a lot in this market. This is a declining market right now. Not a lot to buy, but I recommend being very, very careful. One of the areas that you can buy in is medical, but just be careful. There's a lot of stuff in the market. Boy, you are absolutely right. Thank you for this. I-bonds are very good in this market. Absolutely. What's happening now? A lot of people are going into bonds. That's the reason why, that we're seeing the TBT and stuff like that do so well. Let me give you kind of an idea of bonds in terms of in terms of where we're at. This is let's add this. This is a little graph that I made regarding the bonds. So the TBT is the one on the the one in red. The regular bond fund is, as you can see, it's been declining as the bonds have been losing value. As the interest rates go up, bonds typically go down. So if you have an inverse like the TBT, it's going to go up. But if you have a bond fund, it's going to go down. And this definitely shows that. The line across the middle, that is cash. So actually, cash has declined a little bit, about 2% since the beginning of the year, which is sort of correct because of the inflation. But right now, these bond funds, and that's where I think that the market is moving. It's moving out of stocks into these bonds, so into the government bonds. That's the absolute safety. So I do see a lot of people moving into the government bonds. As they move into government bonds and the interest rates go up, you're going to see the TBT probably do a little bit better. So that's just kind of that's kind of where it's at. All right, let's look at Tesla. Thank you so much for that. Let's pull over to Tesla. I still love the company. I just don't own it right now because it's gonna go through a little bit of a it's gonna go through some more pain, I'm afraid. But Tesla, let's pull over to the Tesla chart. There we go. So Tesla basically, again, it's 692. I see the support for Tesla right here at about 620. All right. If you look at the relative strength line, that's this blue line here. It has been moving down and then it went sideways, and it looks like it's making an attempt. But I'm afraid that if it gets support at 620 and bounces, that's great. But I see it moving lower than 620. So there's a lot of overhead. There's a lot of overhead resistance here. So right now it's not a good time to enter. We're going to go through earnings here. I think the earnings are going to be fairly decent. But you remember, in China they've shut down the factory there due to COVID. So I do think that we may see a pullback in terms of numbers. So don't buy this. Wait until we go through earnings. Then once we go through earnings, I think that we will see. I do see some support basically right here at about that we can get back in to Tesla. This is the 900 level, and then this is the $500 level. So the overhead resistance exists above 900 on Tesla, and I do think that this is the floor, 500 right here. Currently, it is getting support at 620, and I think if it breaks the support here, we're likely to see it move down to 500. At 500, I'm starting to get interested in buying it, but right now I can't get excited about it. I think it's got to move lower. I think it's going to base. I think Tesla, if it makes it through this period, it's going to be around. It's going to be a force. So that's something to say. Jay is talking about puts on Tesla. I'd be careful on puts. The reason is I don't think it's going to go lower. It's because I think you're going to pay too much for it. That's the real issue. All right. Thank you for this. Yep. All right. So I-bonds are government issued, and it's impossible to lose money. Yeah, absolutely. I agree with this. By the way, I agree. And you're absolutely correct about this. So, it's a little. There is a site you can buy them right off the site. Right now, there's going to be at least until we bottom out in this market, there's going to be a big demand for bonds, and there are ways that we can take advantage of that. Of course, TBT I think is one of them. as well. All right, let's take a look at S. That's Teladoc. Teladoc, unfortunately, I shorted Teladoc, by the way, but I haven't done much with it yet in a while. The biggest issue that Teladoc has, I believe, it's a great idea, and I think that the world is going that way. But the problem with Teladoc, I believe, is that it is it's easy to copy it. So currently, the price of Teladoc $39, and it has moved up here. And I do think that we might be in a situation. It's almost too late to short this because, as you can see, it's come down. But if you'll notice, it's sticking right to the 200-day line. So currently, it has got a relative strength of 7, which is pretty terrible. There's been a lot of there's actually been a lot of action on this one. They are profitable, interestingly enough. Last quarter, sales are up 25%, and the profits were up. So that's not the problem. But look at the PE ratio. This is the issue. Companies that have PE ratios like this are just getting punished. The PE ratio on Teladoc, 389, which the norm in the market is less than 24. So this is a very, very overvalued stock. The question is, what can you do with it? Today, it was down. It was down about 4%. There's going to be a dead cat bounce on it, looks like, and I think though that it's going to start to continue its movement down as well. So very, very strong downward motion on today. I'm looking at the weekly chart. Let's click on over to the daily and see what's going on there with Teladoc and see. Here's the thing. I would really like to short this one, but I'm a little bit afraid to do it. But because of the cost of the options, I wouldn't probably borrow this one directly. But I do think that there is some potential to possibly short this one. This one could go. Yeah, there we go. So as you can see, but it's lost so much of its value. The best time to short something is when it's getting ready to turn over, and unfortunately, that was way back in November. So just kind of tough there. All right, everybody. Well, I have yammered on here for about 30 minutes, and I appreciate everybody taking a look. Let's take a look and see if I can get a last question on TikTok. What is the okay? Vertex. Okay. The one I like, at least in the interim, and I've been kind of indicating that's one is TBT. This is one I think that is actionable today. It's a bond fund. It's an ETF. Very, very boring. But I do expect that we're going to see, at least for the next few months, we're going to see the market move lower. And I do think this one is getting some support at the 50-day line. If you'll notice on this one, as opposed to the other ones, the 50-day line is moved above the 200-day line. So that's the golden cross. That's a good thing. That happened there in March. It's been moving up, and it got a little bit ahead of itself, and it peaked out at 27. Then it pulled back to the 21-day line, moved up here to 29, and now it's pulled back. So I think that there is an opportunity to get into it here. And I do think I think we're going to see a reversal on this tomorrow based on this candle here. So let's take a look and see. Yeah, we start at the end of the day. We got a nice little pop there, and as you can see, it moved down, and I see now with the reversal in the market, with the reversal of the, I think we're going from a rally to another leg down. I think this one should do pretty well, and that so there's a potential buying opportunity there. All right. Well, let's see. Do I have any last questions here? We have what are we going on here? FLNG. Let's look at FLNG. And look at that. See if I can get a nice chart on that. There we go. Let's start on FLNG. Again, with this problem of the gas pipeline being cut off in Germany, there is going to be a fair amount of demand for this, but I think, you know, the stock market is anticipatory, so that's kind of been baked in. The thing about the relative strength line, it's pretty much flat. I'm not as excited about this as I was just about a month or two ago, because I was buying it back here. Let's see if I have that. So let's see if I have that in there. Let's see where I bought it. But I was playing, yeah. See, I bought 50. Yeah, I bought it totally at the wrong time. Look at that. I bought it right at the pivot, the wrong place to buy it, and it pulled back and I sold out. So not the best on that. Is it going to move higher? Well, I think it might, but at least right now, I think it's still consolidating down. So I wouldn't probably be a buyer if FLNG. All right, thoughts on Rio Tinto. Rio Tinto, of course, is one of the biggest mining companies in the world. And unfortunately, with the decrease in the price of copper, that just happened recently, this is not performing as well as we probably would have liked. So pull up the Rio Tinto. Right now, yeah, as you can see, there we go. Okay, so Rio Tinto, while we were having this inflation, before the economy's cooled, this was doing very, very well. As you can see, as of late, not so much. And the reason is, of course, and it's gone below the 200-day line. This just crossed it. This is potentially, believe it or not, this potentially could be a short. I'm not going to short it here, but this could be potentially short. Yeah, it is. See, there's the death cross right there. And I think this one could move lower. So the relative strength line is pointing down. So yeah, I think that, you know, we're going to see a little bit of pullback in terms of Rio Tinto. So I wouldn't want to own Rio Tinto here. Unfortunately, it's just not looking as good as we would like. Okay, well, thank you, everybody, so very, very much. If you're not already a member of the Action Trailer, it's super easy to do. Just go to www.Dallas Trading Floor and first and last name and email address, and you'll get all set up for that. If you already haven't liked us, please like us. It really helps. It really helps us. You know, when you like the show, because it gets it out there to a lot of people. So thank you very, very much about that. There we go. Okay, well, hopefully that's all right. So please like our show. That helps a lot. And until tomorrow, I'll be back at 5 tomorrow. Everybody, happy trading, and thanks for watching. Tell your friends about the show, and we will see you back here on. We'll see you back here tomorrow.